2024, one of the most popular ways to buy real estate is to buy first-hand from a contractor on a 20/80 deal, which means that you put down 20% on signing and 80% is due to the contractor at the end of the building, which could be 2 years, 3 years away. Now, it's a very favourable payment plan, and theoretically you would say, well, I don't need to think about a mortgage at all until 2-3 years from now. But there's a good reason to already start thinking about a mortgage immediately. In 2-3 years' time when you need the mortgage, God forbid, if there's any difficulty in terms of getting the financing, let's say, unfortunately you lost your job, or your income has dropped, or interest rates have jumped up and the monthly repayment's much more than you thought, or the bank's lending requirements or lending restrictions change. So under any of those circumstances, you are contractually obliged to come through with the mortgage funds, whether you have them or not. So good advice is to immediately, before you sign the purchase contract, get pre-approved for the mortgage, get an Isur Ikroni, make sure that you're good for the money, and after signing the purchase agreement, immediately try to draw down a small chunk of mortgage funds. You don't have to put all of your down payment down, just put down 20% and then take a small chunk of mortgage funds. And what that does is it creates a very small monthly repayment for you immediately, but it moves the loan application. It moves your file from being a theoretical application that may or may not ever happen to an actual done file, a partially done file, and the rest of the funds of the mortgage are sitting there waiting for you. The bank is more or less required to come through and fund. Taking a small chunk of mortgage funds is an insurance policy to make sure that you've bound the bank into the deal, and you know that the bank will be there, the funds will be there for you waiting when you need them.